Well, we could blame Jerome Powell, tariff re-escalations, a weakening labor market, or even nuclear tensions, but what we saw today was to be expected eventually in the dull market that we've been in for most of July. And big funds took advantage of the headlines today to take profits into retail hype buying. The good news, historically these corrections don't last too long, and things are still looking really strong for the fall. However, we're most likely going to have to endure some chop ahead, as is often the case with markets topping into the backdrop of good news like we saw a lot of this week. We saw that also last week for crypto, which couldn't ask for more favorable conditions, and then the same was true for the broader indices as we saw the last few days, with 96% of tech companies reporting positive earnings. When rallies can't continue in a favorable environment like that, it's a sign to anticipate at least a local top. So let's discuss the week that was as we look at the key charts for stocks, commodities, and crypto. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and I hope you all had a good week despite the sea of red out there today. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It helps the content get out there to more people, and it means a lot to me personally. So we had mixed market reactions most of the week between positive earnings and a less than favorable FOMC press conference. If we look to the SPX chart, you can really see that tension play out between multiple gap up opens met by sell-offs during the trading day. That's a classic example of retail buying pushing up prices met by institutions unloading into said retail hype. The next time you see price action like this, look for the low of the worst news day of the week as an indicator. If broken, expect more downward price action ahead. For us, that was the FOMC low of Wednesday. When that broke yesterday, it really pushed us over the edge to open us up to more downward price action. Now, some folks were saying that the sell-off today was related to tariffs, but it was really primarily caused by the jobs numbers. While U.S. inflation dropped to 1.67%, the labor market cooled significantly. July came in at just 73,000 instead of the expected 106,000, and the May jobs report was revised down by 125,000 from formerly 144,000 to just 19,000. And June's report was also revised down by 133,000 from 147K to a mere 14,000 jobs. The one benefit of the weak labor market numbers is that it caused the odds of a September rate cut to jump dramatically, which is going to be good for risk assets like Bitcoin if that does happen. Now, I know days like this can feel discouraging. I felt it myself today. Despite taking a fair amount of profits along the way the last couple of months, seeing just that decrease from July 18th to today can really feel like a setback. But just remember that these extreme periods don't last forever, and we have history to guide us a bit on the path we can expect ahead. If we look at this chart of our current price action, this is a couple weeks outdated, but if we compare it to an average of historical trends over the years, we can see that we're getting into a period of chop with some slight corrections along the way. Additionally, if we consider average corrections, we normally get 2 meaningful corrections each year, and since we already had one 20% plus correction in April, that takes the odds of another big correction way down. If now is going to be that second period of correction again, historical averages would point to roughly 5 to 8% that we can expect for a correction, which isn't too far away from the already 3% pullback we saw the last 2 days. While today wasn't great for our portfolios, the good part is that we will most likely have one more shot at finding some good entries on quality names before the fall. We discussed last week that institutional players are historically underweight equities right now. They didn't jump on the dip as quickly as you and I did back in April, and they will want to push prices down on the names that they really want to build a meaningful position in. As we look for those opportune entries over the coming weeks, remember that only a few sectors are running, and we need to pick the right sectors and the right names. Therefore, I'm focusing on AI, semiconductors, fintech, and, a couple other odd industries that we've discussed here and there, as those will have the best risk to reward and the highest chance of running by meaningful percentage points. With AI and semiconductors in particular, there are so many CapEx dollars being spent on that industry. I mean, we saw investments just from Meta and Microsoft this week that they should have tailwinds for the foreseeable future. So let's get right into the charts. All right, starting here on the S&P 500, and you can see our Wednesday low right here that I have marked out with this white line. And as soon as we broke that, even though we just wicked down and closed back above it, that opened us up to the chance of dropping down, which we saw today. and we got as low as 6,200 points. That drop overall for us has been 3.33%, I believe. Yep, 3.3% from the top. If we see that 5% correction that we were talking about in the intro, that would take us to 6,100 points and would wipe out the last 5 weeks of price action. And if we see that 8% pullback, currently that would take us all the way down to the 200-day moving average. It would also have us closing this one gap fill that we have right here, which is sitting right just above 6,033 points for that gap fill right there. So we would be getting back into our consolidation zone before the breakout into new all-time highs at 6,150. But that's what we can anticipate for that 5 to 8% on the downside. So keep your eyes on that. And as we do that, also look to the daily RSI reset halfway down the chart today. And if we get that resetting all the way down, and we're getting to that point where we're at that 5 to 8% correction, that could be an early sign to you that we might be bottoming out. The last thing just to mention is that the last 2 days of price action took out all the gains we saw since the 3rd of July. So almost a month of slowly grinding price action wiped out just by the last couple days alone. The NASDAQ is very similar, where we took out the price action all the way back here to the 3rd of July. This uptrending channel, which statistically normally breaks to the downside, did just that, broke to the downside. And we also reset the RSI halfway. Our correction today on the NASDAQ was at a maximum of 3.88%, so a little bit more. And if we go out to that 8%, that would take us roughly, here to 21,700, which would actually align with the center of this consolidation range and would also close that gap for us. So we have a rough target to look out for on the NASDAQ as well. If we look to SMH, the semiconductors, these really led the way down on Thursday, and they corrected today as well, but they were a bit stronger than some of the other indices today. So they closed just barely into our all-time high breakout zone right here that we first got into on the 3rd of July. So again, wiped out about the same amount of price action, but closed just a little bit stronger than the S&P 500 and the NASDAQ. So obviously the narrative is still behind semiconductors and AI, and we're seeing that strength continue, even though we broke this trend line from our massive run up from the April 7th bottom. But I would anticipate a bit of chop. Perhaps we find support here at this center confluence cloud, which currently would have us at 276 for SMH. Looking to the DXY, the US dollar, that dropped today. And you might be wondering, why did this drop today? Normally, the DXY is rallying when risk assets are selling off. Well, this is stemming from that increased chance of rate cuts in September, which would weaken the dollar. We had this breakout of the inverse head and shoulders where we're still targeting that 1017 level, or 1018, let's say for round numbers. But we had that pullback today. It's retesting our neckline. So let's keep an eye on this next week. If there is continued weakness in the broader indices and in tech, I imagine we are going to head up to see that target hit. And the DXY has been shorted like it has never been shorted before in recent weeks. It was the most shorted really play in all of markets. So it is due for a little bit of a bounce. I think in a macro sense, the dollar is still going to weaken over the longer term. We just have to have a little bounce right now after it's been beat up for weeks and months. If we're looking to gold with the risk-off attitude, gold rallied back up into this range after breaking down earlier in the week. So now we're just watching that overhead trend line at 3,435 per ounce. If that breaks through, I would anticipate gold rallying up potentially as high as that round $4,000 level. But before that, I think 3,600 is a safer target for a near-term breakout for gold. Looking to REMX, which had that big breakout 3 weeks ago that we discussed on Monday, where I missed the entry because my alerts were not set properly. Always learning a new lesson. But we're having a retrace now after getting a bit overheated on the daily. And we're getting into what I would consider the first value zone here at about $47. So I've got that marked out here by these previous swing tops. Below that, if we got all the way to the 50% at 43.70, that would be a really good price point. And anywhere really between this zone from 43 to 47, if you're looking to build a position, would not be a bad play, because this has been beat up for a couple of years, and I imagine the recovery, since this has been in a downtrend since 2022, the recovery would also play out over a meaningful amount of time. And you can see that the bands are just squeezing here tighter. So as these begin to squeeze in tighter, we can expect a volatile move incoming. And my guess would be that with the demand for semiconductors, and you rarely see squeezing like this on the weekly, with the demand for semiconductors and everything else, batteries, that is associated with these rare earth minerals, that the demand is only going to increase. So this could be a good longer term play to consider. Looking to MU, and as I mentioned on Monday, this is one of the semiconductor names that I want to start building a position in, because this and TSM have the best PE ratio. TSM hasn't really pulled back in a meaningful way off the highs yet, like this has, but I just took my first nibble this week because we found a little bit of support in this volume cluster right here. I suspect it might still drop a little bit more. We do have this gap fill right here that we have now closed, and it perfectly hit that. So that was the other factor that was having me get in a little bit. And then if we drop any lower, I would be looking at this breakout trend line that we broke out from in June to see if we can get a back test with that. And I imagine by the time we get there, that would also coincide with the 200-day moving average for support. So I would get in a bit more heavily there, and perhaps that aligns with this next volume cluster around 98. So anywhere 98 to $100 would, in my mind, be a great value zone. And then as a swing trade, you have your clear and validation. If we break down from the 200-day moving average from this trend line, then you get out of the trade and you can look for the next area of support, which if we don't find it there, then I would be looking down to $91, so about 10% below. Then this gap fill down here at $86 beyond that, but the sector would really have to get beat up for us to get way back down there. Looking to Bitcoin, and we have this uptrending line of resistance that we broke out from, that we back tested and wicked through, and now have, at least for the day, closed above that at about 13,500, let's say. I would really want us to see a weekly candle close above this to show us some strength, but overall this weekly candle is not looking great compared to actually an all-time high, fairly strong looking candle last week. So let's keep an eye on this on Sunday night to see what this weekly candle can do. If we are just looking at our weekly RSI, we are also right on this 62 level. And as we talked about in the past, 8 out of the last 9 times that this broke down from 62, well, actually, I'm sorry. Now 8 of the last 10 times, because we had a little fake out here, we have dropped more than 10% on Bitcoin. So watch this line as well. I would love to see the weekly RSI maintain above that 62 level. If we drop below, that opens us up for a little bigger correction, and then we would be looking to this breakout zone at 110,700, and we have also the 109,000 level below that. But if we're closing a weekly candle down here and multiple daily candles, that really opens us up to, honestly, perhaps going as low as this $100,000 level at these swing lows. So that's a far way off from here. Let's see what the price action does and if we can mount some strength. But we need to be aware that that could be in play if we see some more weakness in the charts. If we're looking to the daily, we did close our daily right below that trend line coming from the highs in December and January. Now we are just above it today, so I'd love to see this candle close above. But really breaking below this has opened us back up to testing that 110,700. So keep your eye on these daily candles. I suspect as we're getting into the weekend, also because it's been some time since these highs, we could see a bounce, but I'm still anticipating that a little bit more time needs to pass before we can see a more meaningful recovery. So right now my base case is a bounce, but I'm really open to the idea of a bit more downside price action, and holding that 110.800 would be ideal. If we're looking to Solana, you can see we broke that trend line that we were flirting with earlier in the week, had that wick below and then closed right back above it, and then it failed on that fourth time retest there. Now we're finding just a little bit of support at the 200-day moving average, and honestly, I thought we would have found a little bit more support right here at $168. That was our range breakout, this previous resistance here, which I would have anticipated would have played a bit more support, but regardless, that failed. So now we have to look out to the downside. If we're looking at topping patterns, and also we had a bit of a falling wedge here that I had been watching on Solana. If we map that out right here like that for our falling wedge, maybe we can mark it up like that. Normally, falling wedges have a statistically higher chance of breaking to the upside, but our downside target from that now would be all the way down at just under $140, which is a pretty scary target from here. That takes us back almost to the lows of the 22nd of June, kind of right in line right here. But we do have some support levels here at these previous peaks and these lows coming in at $156, and then this bottoming base right here and these previous tops at $145. So we just need to take this a level at a time. The good news is the 4-hour RSI did bottom out. So this is why I'm saying I'm anticipating perhaps a near-term bounce, but our daily RSI has not yet reset, and we really had an extreme spike into the area above 70 here on the daily RSI. So I would imagine that needs to cool off just a little bit more to get to the bottom of the range. So what you can do is watch this. If the daily RSI looks like it's resetting, coming at least to that 33, 32 level, and we're into one of these supports, I would anticipate then a more meaningful bounce. And actually our confluence model cloud here on the center cloud is right around that $145 price target. So that's something to watch there. And just in terms of time, if we're taking this in days, it's interesting how corrections and moves up often play out in even numbers. So we had 30 days for this previous correction. The previous move up was 45 days. And then this last move up right here was exactly 30 days again to our topping bar right there. So if we're thinking about when this could potentially turn around, I'm thinking about 10 days, perhaps a third of the time. Normally a third of the time is a balance correction, but we're almost to that mark. That's going to be tomorrow. And then we're looking to half the time, 15 days, or 2/3 of the time at 20 days for perhaps finding a turnaround point. So that 10 days would take us to actually where we are right now on this daily candle. So this weekend, we could anticipate a bounce, but I think we'll have a little bit of more time that needs to pass before we find our bottom. So that would put us to Thursday of next week, or the following Tuesday. Thursday would be for 15 days, or for 20 bars, that would be the following Tuesday, August 12th, for a point where we can look out time-wise for an eventual low. And then we're just marrying up that time analysis with what we're seeing in the daily RSI, with what we're seeing on our support levels to anticipate a turnaround point. And if you're playing perps, these kinds of bottoms, when you can identify that everything is bottoming and your time analysis is played out, are really high conviction entries where you can get into a long position and the probabilities are stacked in your favor that the charts are most likely going to correct in the opposing direction for the next few weeks, making it a much safer play than, say, getting along earlier in the correction the last few days. Looking to MicroStrategy, and they had fantastic earnings this week, but it wasn't enough to shield them from the sell-off today and a lot of the news moving forward about less ATM and their new financial offerings are really looking positive for the future. But we did break down with Bitcoin breaking down, and we found some support around these lows. We have this trend line at $370. These lows right here at $360. So we're eyeing that for support. This cup and handle that we were eyeing for a potential breakout did not follow through. So we broke to the upside, and there wasn't really enough volume on this breakout. And then when we came back down, we broke down from the neckline. So it's not completely off the cards yet, but if we break these lows, I would completely consider this price target invalid. And right now it's already been weakened, I would say, by 80% just because of this breakdown that we've seen. So we need to look to new upside price targets once we find a base here and can recover again. But that aside, we really are hoping to find support here soon to not make a lower low. If we do break these lows, then we would be looking to that 340 level and the 200-day moving average. I think in the long run, MicroStrategy is still going to do well this fall, but we just need to see what Bitcoin is going to do. And these Bitcoin adjacent plays are showing a bit of weakness right now. If we turn to Tesla, this wedge pattern that we've been in since the end of May finally broke, and unfortunately broke with a daily close on the downside. And that puts our price target in play for this measured move from the opening of the wedge right there, which I don't want to consider totally valid yet, because sometimes wedge patterns can be a bit reliable towards the end. And I've seen a lot of these where it breaks one way, then goes and breaks the other way, and then still comes back into the range. So I want to give this a little bit more time, because the downside price target is all the way around $200, which would be actually just below our bottoming pattern here that we saw in April of this year. So not a great price target, but we need to give this just a little bit more time before we take that too seriously. And then along the way, we're looking to different zones for support. So next level down below where we have really strong support would be at 272, this base right here and these previous wicks. And I guess a little bit closer, we also have that $290 level to that $300 level, with these previous tops right here and these bottoms to watch out for. I haven't covered the pair trade much lately, and I got a request to cover it again because the pair trade has been chopping around in a bit of indecision, and normally we don't see trend changes happen quite this often. So I'm normally trading this on the 1 hour chart. In a period of chop like this might be a time where you want to consider trading on a bit larger time frame to cut out some of that noise, unless you're really active to nail some of these. Or it's perfectly okay, in my humble opinion too, to sit some of these out, because the RSI actually, as we're chopping here, hasn't gone above my tolerance, and the levels I really pay attention to are when we get above 78 or below 23 here on the RSI. So this is just indicative of this tightening range that we're seeing right here. That's been between 1.22 to 1.37 roughly. Okay, looking to bull, and I am glad I sold my calls a few days ago as we were getting close to $18 here, as we talked about on Monday, just because of this dead cap bounce. There are a lot of people that are stuck or looking to this level again, and we could anticipate seeing selling around there. And I still held on to all my spot, and I started reloading some of my calls this week. I got in here as we were finding this base right around $13 and what is that, 64 cents. We wicked below that today, and now we are into this trend line where it appears we found some support. This obviously still has some proving to do. If we break below this trend line, I would exit some of my position and reconsider it for the near term. But I think at least in the fall, this should run more if Coinbase and Hood continue to run more. So watch this trend line carefully. If we close some daily candles below it, thesis has changed, time to get out of the position and look for a better entry down low, perhaps around that $11 mark or so. I would say actually, yeah, $11.50, right around there between these previous peaks and these bottoms could be a really great value if we get down there. And if we break below these previous peaks, then watch out, something is definitely wrong if we're breaking below that. If we're looking to coin has had absolutely dramatic price action, as we were talking about hitting this price target so quickly. I was really surprised by that. And you can see the mean reversion and RSI was quite overextended. As we came back down into this trend line and bounced, I thought we would maybe find some support there, because that was already about, not quite a 20, but an 18% correction off the top. And now we corrected 30%. And I think we might find some support here at this little consolidation zone and these previous peaks. If we don't find support here, then I would be looking to these previous tops around 276 to 265, somewhere in that range there. But the daily RSI has almost completely reset on coin. This really feels like bigger players taking a bunch of profits into retail hype. And as we talked about, I can't remember if it was Monday or Friday, but the fact that it was Friday last week, I said to watch out because we had the announcement of perp trading coming for Coinbase for US customers. And in any other time, that would have been the most bullish news. It's a huge moneymaker for them. And we just kept selling off after that. So when you have great news, like we talked about in the intro, met by selling demand, it's telling you that something has shifted and to watch out, at least for a local top. And we'll need to see what this can do in the fall. If you haven't gotten into a position, this right here is actually a fairly safe entry, because you are right into support, and if it breaks down, you can get out fairly unscathed with a small loss, and then you would look to the next support line down below around that 265 to perhaps scout an entry there. If we look to Hood did not get as beat up. If we look to the highs, we are down, at the lowest point about 17%, and then we closed at about 11% down. We had a pretty good bounce on this one today. So it's just telling you that there is relative strength in Hood, but we did break this underside support line. Even though we closed above it, we wicked through it. So just like we saw in Solana, I would anticipate that this support line is now going to break in the coming days. The daily RSI finally started turning over and is on its way to correcting. If we look to the 4 hour, let's see how far down we've come on that. Oh, the 4 hour is pretty close to the bottom of the range and printing a mean reversion dot already. So who knows? Hood might fare a little bit better than coin in the near term. There definitely does seem to be relative strength in this name, but we just need to keep an eye on what the broader markets are doing. And I think both of these names will most likely see higher prices this fall, but given the nature of the correction, I think it's going to take a little bit of time before we get to those new all-time high prices. All right, someone wanted me to cover Circle again, and there's weakness in the crypto space right now, so Circle has also been caught up in that, and now we have made a lower high and a lower low. Just breaking this low right here, we are into the 50% and this swing top right here at $165. Now you might be wondering, where are you measuring your Fibonacci levels from? Well, I'm measuring it from the IPO price. So right now, if you are not in Circle, this 50% level could be a good buy. There's still weakness in the overall space, so I'm open to the idea of us going all the way back down to 134. But again, we have that clear invalidation. So if we break through, have your stop order set, you lose a little bit, but it gives you a chance to load up at better prices. And honestly, for my position, if we break below the 50%, I would consider getting out of it temporarily and then looking for a value zone to load up again. With these IPOs, and as we saw with Figma this week, I'll cover it in just a little bit, there is hype that happens early on, but if you don't get in, don't fret. Normally with IPOs, even if they run up out of the gate, 12 to 18 months later, they come back down to earth, usually drop below their IPO price. And if you really believe in the company and the fundamentals are solid, you can find a good value at that juncture if you're just a little bit patient. Looking to HIMS, which has been really strong, and our daily RSI, we tagged the top of the range, but our mean reversion isn't that far extended yet compared to these previous couple of peaks. So I was anticipating we would have a little bit more room to run, at least to that 786 level at $75 or that 100% extension at the $84. But these last couple candles really do look like at least local topping candles. So I'm watching this. I think if there's weakness in the broader market, perhaps we sell off a little bit. And then if we're anticipating support, obviously we can look to our RSI resetting, but we could also just draw an underside trend line here and see if we intersect with that and get a bounce away to then perhaps test these levels. And if you're looking to reload, some area like that could be a great place to get back in, either with spot or with options. And you know what? Actually, we can extend this trend line all the way down here. It connects right through nicely. I should have actually been watching that on these last bounces, but just realized that now. So if we do come back down to the trend line, we do have to watch that fourth time retest because it does have a higher chance of breaking through, but still we have to anticipate that support is support until it is not. Okay, really quickly, we have to talk about Deckers because it had that island reversal that we talked about a little over a week ago, which is generally a very bullish sign, but our price action came back down and broke below that gap up open, which invalidates the island reversal. And even though we had volume on the follow through, it's just showing you that it's not ready to run yet. And now we have to keep our eyes on this if it is one we want to play, because the earnings report was quite positive. They are expanding. People aren't slowing down on buying their UGG and Hoka shoes. So things are looking good, but that's not coming through yet in the price action. So we have this uptrending trend line. We broke through it once. I'd be watching this for support around that even $100 level, where it might make sense to buy some leaps if this is one you're looking at, because it's going to recover eventually. It's not going to be the fastest mover this fall. Or then looking down below to where we found all that support at 95. The only thing is, the more times we test this, and if there is broader market weakness right now, I wonder if we can get all the way through to that $80 level. And if we go way back in time, that $80 level played a ton of support here and was previous resistance. So for a long-term value play, if we did get down there for whatever reason, even though it doesn't make sense with the recent earnings report and tariff easing, that would be a great value play on Deckers. And you know what? Just for fun, I'm going to set my alerts down here. I don't talk about Palantir too much, but since we talked about that breakout, we just need to revisit it. Palantir was showing relative strength compared to the rest of the market, and they just landed a new $10 billion government contract. I think it's one of the largest, if not the largest, government contract ever awarded. So they closed right on this trend line. We wicked back below it, but holding above this would be a good sign. And if it can hold above this trend line, particularly if the rest of the market is cooling off for a bit, that's an excessive sign of strength. And it might be worth trying a play on this, even though it's run a lot already, just to see if it can really rebound on that revenue that that government contract is going to bring in. I also want to revisit SOFI really quickly, because this was one that I was playing shorter term calls on for a blow off top play. And they had great earnings this week, pop on earnings, and I sold my at least 815 calls, which I'm glad I did because it sold off massively. Then we had a positive day, another gap up, another gap down. This is a classic example of what we saw also on the S&P 500 of retail hype buying and bigger institutions selling. We saw that a couple times, rebounded a bit today. So right now we need to see what this can do, but this is very funky price action that makes me slightly concerned, but ultimately we need to let price lead the way. So let's see what this does over the next couple of weeks, and we'll just be keeping our eyes on it. Moving on to one of the two green names in my portfolio today, which is ATAI, which continues to show strength. And this is just the value in diversification, even if it is a riskier play. But from our entries around that $2.68 range right here, we are now up at $4.20, almost $4.17. So this one is still doing well just based off the regulatory backdrop. If we, well, let's take this to the weekly chart. You can see where it came from. So it still has a fair amount of room to run, but now I am watching it because we are getting overextended on the weekly. We're for sure overextended on the daily. And as we get close to some of these peaks around the $4.90 range, I am at least going to unload my calls and perhaps hold on to the spot a bit longer, because nothing goes up in a straight line, and this is probably going to have to correct a little bit before it can attempt another move higher. All right, I also want to cover NVO, Novo Nordisk, today. It's not a normal play of mine, but we are in a good value zone. And actually, as we corrected earlier this year. I'm on the weekly chart right now. On April 7th, I bought this as we were into this trend line that aligned with all these previous tops because we were oversold on the weekly, way oversold on the daily. And now on earnings, they had a very significant drop down. And our weekly isn't oversold, but the daily for sure is. And the reason I bought is because now we are into all this previous underside support from 21 through 22. And if this doesn't hold, then I would imagine we're going all the way down to $37. So I like this just from a setup in terms of having that clear and validation. So I bought my position. I know if that breaks below these previous lows to get out at a small loss, and then I would have another chance to reload. I don't know if I would if it doesn't bounce here because it has shown excessive weakness and we are still in this prolonged downtrend. And we're now in the lower band of this cloud. And as we've talked about in the past, when we go through these bands of the cloud, we normally take a couple swings on the upside and then a couple of swings on the downside. So, a world in which this could still languish through 2026 before correcting in a meaningful way. And I want to see a little bit quicker returns in my portfolio. And this isn't the name I really believe in fundamentally. All right. And last one before we get into some of the treasury plays, and that's Figma, which on the IPO this week, I put in an order for 500 shares. I should have put in for more. I only got one filled, and there were tons of people on X who only had one share filled, which is absolutely ridiculous. The institutions get to the front of the line and retail gets the shaft, so to speak. But that was at least with Robinhood. I know with other players like Fidelity, I don't think they had the Figma IPO, but you have a better shot of getting your IPO shares filled actually. So I have my one share that I'm holding on to proudly, but we saw a correction today with the rest of the market, still from the $33 IPO up to $121. Not bad. I would not chase it at this point, particularly with the market weakness we're seeing. Again, for me now, this is on the watch it in 12 to 18 months list to see if it has that eventual correction, and then you can get in at a good value zone after the hype has died down. All right, moving on to the treasury plays, and the first one is DFDV, which broke down from that underside support a little over a week ago and broke down, back tested it for resistance. Now, I still think DFDV has a ways to move this fall, but it was showing us near-term weakness when we broke that wedge to the upside and then broke back down to the downside. Actually, this is a great example relating back to what we were looking at on Tesla, where a wedge pattern can fake you out one way and then move in the opposing direction. So let's keep our fingers crossed for Tesla. And we hit that first value zone here at the 100% extension, which is at that low $14 mark, which aligns with these previous tops, these previous bottoms. And we wicked just a little bit below it, but we actually had a positive day today when the rest of the market was red. And this was notable. The treasuries have been very weak. Bitcoin was weak today too, but the treasuries really didn't get hit that hard today compared to what was going on out there. So that's something important to note. If we can't hold this level, then it is a fairly big drop all the way down to $5.68 to the 150% to the 1618 extension at $3.59. We might have some intermediate support here at 751, but if we don't bounce here, I actually had a little limit order fill. I would get back out of it. If we look to the RSI, on the daily, mean reversion is about to print a green dot. Our daily RSI isn't all the way reset, but our 4-hour, I bet you, is way oversold. So at least a near-term bounce would be what I would anticipate here on DFDV. ASST just keeps bleeding out, and we are on falling wedge watch, and falling wedges normally break out to the upside, but this has run a bit longer than I thought. I actually had the original wedge drawn like this that we then broke out of and retested from the top side, but I think this is now our new wedge pattern here that we need to watch. And really right now, we were into the last little volume cluster. I really thought we would have found support at $3.55. I actually had a little buy there. And now I'm looking down to $2.55, which is really a huge drop on this one. But if we are going to find any support really between that $2.15 to $2.50 is where that should come in. And if it doesn't, something is wrong for asset and it might be going to zero. No, probably not literally zero, but it won't be doing well. So look out for a bounce play incoming. Our 4-hour RSI is now oversold as well. Reversion's already recovering a little bit. If we look at it on the daily, RSI is also close to the bottom of the range. So finding support here in that, oh, sorry, that's not our cluster, right here. Finding support around that $2.50 to $2.25, $2.15, that would reset our daily RSI and could be a bit higher confidence entry, but there's not a ton of strength in these treasuries broadly right now. NACA had a little bit of a bounce towards the end of the day, but from this wedge pattern where we have our target down here at $3.84, we have accelerated our move down to that area. We bounced a little bit just above the 200-day moving average, but that target is still potentially in play, and this one has been really weak. Now almost just rivaled by ASST, which is catching up to this one, where ASST was stronger for quite some time. And CEP has been trying to hold up, but it just broke this underside support. We've wicked through it a couple times before, but this is not a great sign of strength. Now the next level I'd be looking to is around that $24 at this previous swing bottom way over here. But we are starting to get into the lower band of the cloud. If we close a couple of daily candles down here, I would get out of CEP for the time being, and I would just give it a few weeks to find that eventual bottom. Even with their proximity to the current administration, there are signs of weakness coming through on this chart that we have to watch out for. All right, looking to UPXI, which again, I covered a couple of weeks ago where we had gotten in at these bases and I sold up here around $9 on the way up. And I just started reloading the last few days. We're now into the 236 level right here. And we are also getting into these previous peaks in terms of where we gapped down on that earnings call. So if we got to 420, 421, that would be a very high confidence entry zone. And again, you would want to set your stop just below because this can move by such big percentages. And if we break that, there's a good chance we might test the bottom of the range again at $2.61. But at least this little near-term support we found here and at the center of the confluence cloud right here, that moving average trend line is a good early sign. And now we just need to see the price action prove it to us by hopefully recovering next week. So keep your eye on this one. It's one of the stronger ones. Again, if crypto's weak, I don't know how quickly these treasuries are going to recover, but particularly if Solana runs this fall, this one could be a very interesting play. All right, so that's it for the charts. We just had those monthly candles close for crypto, but watch the weekly close on Sunday to see if we can hold any of the key levels we discussed. For the broader indices, watch for the reaction next week. Will the dip get bought up quickly, or is it going to take some time? If it's the latter, we should prepare ourselves for at least a couple of weeks of grinding and chopping price action, perhaps even a bit more. I look forward to seeing you all on Monday, or if you're signed up for one of the group classes tomorrow morning. Bye for now.